Welcome to the Fast Money Halftime Report. We are getting to the heart of the action as it is happening. Stocks at the lows of the session as the dollar pushes higher and financials continue to fall. How can you protect profits in this sea of red? Let's get to the word on the street right now. Our Fast Money crew today, the Pit Boss, Pete Nigerian, JJ Kinahan of TD Ameritrade, Eugene Profit of Profit Funds, and Jeff Tomasulo of SMB Capital. Pete, let's start it off with you. We've got the dollar at 3.5-month highs, and that seems to be the primary reason behind this decline in the stock market.
Well, we've been watching this dollar trade for a while now. Yesterday, actually, a little bit of a fighting the trend where we had the dollar going higher, and for most of the day, we actually were fighting against that dollar, and the market was trading okay. But today, obviously, with a little bit more of a breakout to the upside, the UUP is the one we've been tracking the most. We've been talking about some of the unusual activity. A couple of months ago, it hit. Right. Again, last Friday, it hit when the UUP. So people are starting to look at the dollar with a speculative upside potential, and they were going all the way out to March. So this wasn't like a short-term trade that they expected just some small moves. They were looking for the dollar to continue over the next several months.
Right. We've got a double whammy happening in today's market. We've got the dollar trading higher, and we also got financials falling, although Bank of America most notably is not suffering as much as the rest of the group. Eugene Profit, in the past hour, we've seen Brian Moynihan anointed, shall I say, the CEO at the press conference. Standing ovation. He says, we just need to flat out execute. Are you a buyer of Bank of America here? We've got the TARP out of the way. We've got a new CEO, and he is committed to simply executing.
Not just yet, Melissa. I'd like to see them execute for a few quarters. Does anyone other than me find it interesting that they're able to find a CEO internally after they paid back TARP and got rid of their compensation limits?
Yeah, that does beg the question. Jeff Tomasulo, I want to switch over to Goldman Sachs and Morgan Stanley. You know, it was a couple days ago we got a note out from Barclays lowering the estimates on those two, specifically because of fixed income, commodity, and currency trading being softer than what the street expected. In that note, they said, you know what, the rest of Wall Street's going to be following. Meredith Whitney today lowering those estimates for that very reason. Today, though, is when the stocks are taking a hit. Is this a buying opportunity in your view?
Well, I'm going to add also to some negativity. Last week when the market was rallying, Goldman Sachs and the rest of the financials did not participate. Now, I'm pretty bullish on Goldman Sachs just because on the technical level, I like the 160 level. So I'm going to be buying and nibbling, maybe not as much as I would have last week, but after seeing the weakness, I'm definitely going to be a little cautious. But I like the 160 level with the stop under 157.
JJ Kinahan, is there any trade here, in your view, in the financials at this point with this pullback?
Well, I actually agree on the Goldman Sachs. I mean, anybody who's bet against Goldman Sachs over the last year and a half is probably not richer for it. They just seem to perform quarter after quarter after quarter. Going back to the Bank of America one, I actually like Bank of America right here. So much of it's out of the way. But again, I think all eyes are on what we're seeing a little bit with Citi today and the fact that it's trading near a level, that 315 level that we all have to keep our eyes on. If it breaks that, we're in a bit of trouble.
Pete, you were on the desk last night. We were pouring over this, and we really laid it out straight for Vikram Panda in terms of how he handled this offering. But all that aside, today,
right.
you know, Citi is trading at 320 or so. We heard some rumors of, this is out there in the market, we should say, not rumors, out there in the market, that there could be a reverse split here. Is this even a call option?
Well, I think it certainly is a call option, but as we discussed last night, a call option that you're looking out that never expires, or at least hopefully it never expires, but a call option that you're not looking for the next week, the next month. You're talking about multiple years, and in that case, absolutely, Melissa. I think you've got to like this at these levels. I think Citi somewhere near $3, $3.25, wherever it may be at the moment. That's not necessarily a bad thing, but you have to have a long-term projection, just like I think you have to have with Bank of America. Yes, they've paid back the TARP. Yes, they've got a new CEO, but they've diluted themselves to the point where it's going to be very, very difficult for them to produce the kind of numbers that people are expecting over the next couple of months. I think if you're looking out multiple years, I think you could get a double out of Bank of America. You certainly could get a double out of Citi, but you can't have a short-term horizon on these names right now.
A double out of Citi, that's what we heard when people were piling in at $5 a share, and we still have the Treasury on the sidelines waiting for it to unload its shares, which will then be dilutive once again to shareholders. Eugene Profit, even at a call option, your risk here, if you buy the stock, is pretty, I mean, it's unlimited. Really, yeah, you can lose your entire investment.
Yeah, I agree with what Pete said. I think here in the sector, I would utilize a barbell strategy. I would buy the Goldman, I would buy the Morgan Stanley, and then I might throw a little bit of money at Citi and at Bank of America, kind of more of a speculative play, so that you kind of benefit each way. But you got to know that you're taking a lot of risks here down, even though it's $3 a share.
Okay, let's move on and talk about our next trade. Go deeper into the dollar and what its rise could mean for the commodity and emerging market trade. We bring in the ambassador, Tim Seymour, who joins us on the Fast Line. Tim, always good to speak with you.
Hey, Melissa, how you doing?
What levels are you watching on the Dixie, or how high are we going to go?
Well, I think as we got through 77.50, that had me reassess levels. That was the level which we were having trouble breaking through all the way back through the early part of this cycle. But if you go all the way back to where the Fed started easing off rates in the fall, in August of 2007, we were around 81 and a quarter on the Dixie. Look, the trend down in the dollar is something that's going to continue to happen here, but in the short run, this trade is being compounded by the concerns out of Europe. So we had Greece downgraded yesterday. Italy's got debt to GDP of over 120%, and there's a lot of people looking at them being the next downgrade. With that, you're seeing the euro underperform within this Dixie basket. It's the biggest part of it, and it's the reason why the dollar is moving as much as it is. I think you watch kind of 80 and 3/4 to 81 and a quarter is the place where I think we could test, and then I think I get back into this trade.
And then at that point, you would initiate maybe some more positions or expanding your positions in some of the commodities?
Yeah, well, I'd say they've traded very well here, and guess what? Emerging markets have done very well and can do well if you look back over time, especially 2005 when the dollar rallies. But no, I don't think you need to get too hard back into these trades until you see the dollar find this level.
All right, Ambassador, see you tonight on the desk. Tim Seymour on the Fast Line. Time now to take your position. Cell phone giants RIM and Palm set to report earnings after the bell. Both companies trading to the downside ahead of the release. Is this your time to get in? Now, Pete, the options market, you guys are like crystal ball readers. The implied move on RIM is 8 to 9% because of the past activity. In fact, take a look at our chart of the day. This is the past patterns, the past moves and percentages on RIM. How do you take advantage of this volatility?
Well, I think the one thing that you can look at today with Research in Motion is when you're looking at the volatility now exceeding 130% in the December options. That is a huge number. And when then you look out one more month into January, trading about a 50%. It sets up very, very nicely, as they oftentimes do, as you get closer to those expirations, which we obviously are at tomorrow. That's a great opportunity to look at the January against actually selling some of this high premium that you're getting out in December right now. Sets up really, really nicely because you've got such a monster disparity, and you can limit your exposure, you limit the risk. I like that trade right now. It sets up across the board through many of the earnings cycles, but particularly in Research in Motion, the disparity, 50 to 130, 140%, that's a huge number.
Melissa, just to add to that, I think the level, I think Pete is right. When you're a fast money trader, you got to be very protective of your risk. It's hard to take a position going into these earnings based on that volatility. One level to look at in RIM, if it stays above the $65 level after the earnings, we could have an up move to the $70 level. So keep that in mind when you're a fast money trader.
And keeping with the options theme, JJ, you're seeing some activity in Palm.
Yeah, absolutely. We're seeing buyers of the January 10 puts, quite a few of those. And, one of the things that I would add to what Pete has said here is one of the mistakes we see of retail traders is buying the December options the day before expiration.
Right.
And when you do that, if you're wrong, you're dead.
Right. It's
There's
over.
nothing left.
Tomorrow, it's done, guys.
All right. And that's why the January options are trading so heavily today rather than the Decembers.
Okay, time now for Fast and Furious, where we answer all your burning questions into the close today. Nike set to report earnings after the bell. Pete, are you a buyer?
Absolutely. I like Nike despite all the headaches with Tiger Woods and all that news that's going on out there. The company just continues to perform well. I like Phil Knight. I like Nike.
Amazon's target gets higher and higher and higher. 170 at Citi today. Are you a buyer, JJ?
Yes, I am, but I would buy it by selling the January 120 puts at $2.50. Make your break-even price 117.5, so you have some room for slippage.
Oil's lower today on the back of a stronger dollar. Is this your buying opportunity, Eugene?
No, it's not. Oil inventories are still too high. I'd look more at natural gas.
And Goldman Sachs is trading to the downside today, down 2%. Jeff, what do you do?
I'm going to be buying at the 160 level. I'm a little cautious because of the weakness that we're seeing in financials. All
right, going to take a pause here on the halftime report. On tonight's Fast Money, the CEO of General Mills joins us live, and we want to hear from you. So send us your questions for the boss of Cheerios. Fast